Hello, good afternoon, and welcome to this webinar for sole traders about how to get MTD done with FreeAgent. Here's an agenda of what we're going to talk about today. We're going to talk about what you need to do to keep your records compliant with Making Tax Digital. We're going to talk about whether you would keep your records on the accruals or cash basis. I'll explain what I mean by that. We're going to talk about the new quarterly updates you're going to need to do, what they'll look like, what will go in them, how to correct any mistakes. And then finally, we'll have a look at what happens at the end of the year. You're used to doing self-assessment tax returns. What's the new final declaration going to be like under Making Tax Digital for income tax? I'm Emily Coltman, I'm FreeAgent's Chief Accountant, and with me on the flight deck is my awesome colleague, Ben Morley, who is the Implementation Team Manager here at FreeAgent, and he's going to be answering as many questions as he can as we go through this webinar. So thanks again, Ben, for doing that. A few little bits of housekeeping before we get into the main event. So today's session is going to be recorded, and we will be sending a copy of the recording to anybody who's registered to join the webinar. So if you need to leave before the webinar's finished, that's not a problem. You will still get a copy of the recording. If you have any questions that you'd like to put to Ben, please put them in the Q&A box as opposed to the chat box. If you put them in the chat box, unfortunately, Ben can't see them. So you need to put them in the Q&A box for Ben to have a chance to answer your question. He'll answer as many of your questions as he can, but what I would say is that we're not insured to give tax or accountancy advice. Ben can help answer your questions about Making Tax Digital or about using FreeAgent, but he won't be able to answer anything that relates to accounting advice or tax advice, such as whether you can use a particular cost to reduce the amount of tax that you're going to pay. Ben's not allowed to do that. We're not insured to do that. I would also say we are all here to learn. So please be polite and respectful when you put your questions to Ben. So in terms of what is actually happening for Making Tax Digital for income tax, MTD for income tax for short, here is a brief timeline of what is going to happen and when. Who's going to have to start complying from what point? The 6th of April next year, 2026, that's when sole traders and unincorporated landlords, so by unincorporated I mean if you own the property rather than having a limited company owning the property, you'll have to join Making Tax Digital for income tax once what's called your qualifying income, and I'll explain that in a minute, goes over £50,000 a year. If your qualifying income is over £30,000 a year, but below 50, then you'll come in April 2027, on the 6th of April 2027. And if your qualifying income is over £20,000, but under 30, then you come in on the 6th of April 2028. It is just sole traders and unincorporated landlords who are being mandated to join Making Tax Digital for income tax to that timeline. If you're a partner in a partnership, at the moment, there is no date for you to join Making Tax Digital for income tax. You're going to have to, but we don't yet know when. And by the way, if you are a landlord owning property jointly with somebody else, that almost certainly does not count as a partnership. Jointly owned property, you do have to follow this timeline for when you're joining. If you're running a limited company, if your business is a limited company and you are not also a sole trader and you are not also a landlord, Making Tax Digital for income tax is not going to apply to you because your company is paying corporation tax on its profits, not income tax. And HMRC have ruled out the introduction of Making Tax Digital for corporation tax. So you might have to do it for VAT, you might already be doing it for VAT, but you won't be doing it for the tax you pay on your profit as a limited company because that is corporation tax. I promised to tell you what qualifying income means. It means your total gross income, not your profit. So you've got to include your income before any costs come off when you're thinking about do you or don't you have to register for Making Tax Digital for income tax. And if you're wondering what year HMRC will look at in terms of does your qualifying income go over the threshold, it's the year before you would be due to come on board. So in other words, if your tax return for the tax year that finished on the 5th of April 2025 showed qualifying income of £50,000 or more, you're in the first lot. And by the way, if you've got more than one source of qualifying income, you've got to add them all together. Suppose you've got two different sole trades. You need to consider the income for both trades together. So suppose you are a dog walker and you earn £25,000 a year income as a dog walker. And suppose you are also a website builder and you earn £30,000 a year income before costs as a website builder. That means your qualifying income is over £50,000 a year, you're into MTD for income tax. But what do you have to do? Okay, so we know you're mandated to join Making Tax Digital for income tax at that particular point in time. What does that actually mean? What have you even got to do? You have to register with HMRC for Making Tax Digital for income tax, and you do that through your website, their website rather. What do you have to do in terms of your record keeping? You have to record your business income and expenses digitally. HMRC say you have to use what they call functional compatible software. What does that mean? It basically means you must keep your records digitally. You need to use an accounting software package such as FreeAgent to keep your records digitally. And you must still keep backup for those records. So for instance, when you buy a train ticket to travel to visit a client, you must keep a copy of your ticket, and it can be a digital copy of your ticket. It doesn't necessarily have to be a digital copy of your ticket. You can keep the piece of cardboard if you prefer, but you need to have backup for your income and your costs. If you're using more than one package to keep your records, they've got to talk to each other digitally. What do I mean by that? You're not going to be allowed under Making Tax Digital for income tax to manually type information from one package into another. If you can export a file from one package and import it into another, that's fine. You're not actually doing anything to it. You're not manually typing numbers into a different package. If you are using more than one package, they must talk to each other digitally. Which records do you actually have to keep digitally? If you are in receipt of income that you're not having to report through Making Tax Digital for income tax, the record of that income does not have to be kept digitally. So let's say that you are a sole trader. Let's say that, as I say, you are a dog walker, you're a sole trader, you're operating Making Tax Digital for income tax. You also have a portfolio of shares and you're receiving dividends, just a little bit a year of dividend income. Your dividend income, you do not have to report that through your quarterly updates for Making Tax Digital for income tax. You're going to have to add it to your final declaration, more on that later. But when you actually receive your dividend income from your portfolio, you don't have to keep a digital record of that, along with your business income and costs. You also don't have to necessarily keep digital records of disallowable expenses. If you're using FreeAgent, it's probably best practice to do that so that you can see all your business's income and day-to-day running costs in one place. But you are not mandated to keep digital records of something like if you take a client out for dinner. That is not an allowable expense for tax. In other words, you don't have to keep a digital record of it because it is not a cost that you can use to reduce the amount of profit you pay tax on. Also, if you are using a simplified expenses scheme, you don't have to keep a digital record of that. So as a sole trader, you might work from home. You might be claiming the simplified expenses flat monthly allowance if you are working from home. You don't have to keep a digital record of the costs that back that up. Digital records have to include the amount that you've spent or earned, the date, and the category. So for instance, as a dog walker, you might, let's say, buy some new collars and leads for the dogs that you walk. You need to categorize those as, for example, dog walking equipment or collars and leads, or however you choose to categorize it in your records, but you have to categorize your expenses out as you keep your records. Here are some notes about what records you have to keep for income. That is what you earn in your business. If you receive income net of fees, so let's say, for instance, that you make sales through a platform like Not on the High Street. They pay you what you've earned after they've taken your fees off. So suppose you make sales through Not on the High Street of £1,000. They keep back £100 as their fee and they give you £900. What you have to do is you have to record income of £1,000 and a cost of £100 separately. You've got to split those out. It's not enough to just record income of £900. You've got to split them out and show the income as income, the gross income, and the fee as a cost. If you have more than one source of income that comes under the Making Tax Digital for Income Tax umbrella, you have to keep separate records and file separate quarterly updates for that. So, for example, if you have more than one sole trade, what I described earlier, if you are a dog walker and you are also a website builder, you need to file separate quarterly updates for each of your income sources. So you'd be doing, if you're a sole trader with 2 trades, it would be 8 quarterly updates a year you do. If you are also a landlord, add an extra 4 quarterly updates a year for your landlord income. Then you do one final declaration where you scoop in all of that and any non-Making Tax Digital for Income Tax income that you have. What I would say, just to quickly step sideways, is at FreeAgent, we're often asked why you need to set up a separate FreeAgent account for each different source of income. This is why. We found it is much, much easier to have separate accounts for your separate trades and for your property rentals. You can keep everything separate and individual and file a quarterly update. It's much, much easier to do that from separate accounts, in our opinion, than if you were having to say, okay, now that expense belongs to that trade and that expense belongs to that trade and that expense to the property, all in the same account. It would be very easy to get confused. If you're a retailer, you can make one digital record of your daily gross takings. So if you have a shop and you have taken £5,000 a day, you don't have to break that £5,000 into every single sale as you do your Making Tax Digital for Income Tax records. You can do one record of your daily gross takings, but you do need to have a breakdown of that figure somewhere in case HMRC asks to see it, but that can be on something separate like your till rolls, your Z rolls. The accruals or the cash basis. If you're a sole trader, you can use either. What does that mean? So the accruals basis means you record your business's income when you earn it and your costs when you incur them. So for instance, suppose you did some work for a customer and you invoiced them in April and they paid you in May. Under the accruals basis, you count that income in April when you earned it. But under the cash basis, you record it in May when your customer actually pays you. FreeAgent, by the way, can do either of these. If you have more than one sole trade, you must use the same basis for all of your trades. So my dog walker, who's also a website builder, if they want to use the accruals basis for the dog walking, they must also use it for the website building. If you have a sole trade and you're also a landlord, you can use different bases for the 2 income sources. The default for landlords, by the way, is cash. So you can, if you want, draw up your books for a trade on the accruals basis, but your books for your property on the cash basis. Up to you. Let's have a think now about the quarterly updates. So under Making Tax Digital for Income Tax, you have to file 4 times a year to HMRC to give them a total figure for your income and your expenses during that quarter. You can see there, I've got a screenshot. I'm showing the total income and the total expenses. Underneath that, there is a breakdown of expenses by category. As I say, you do need to keep that breakdown so that you can show HMRC should they ever ask for it. The quarters, you can see there, I've got different figures for each quarter. And you can see there that I'm doing 3 months at a time to the 5th of the month. Those are called tax year quarters or standard quarters. If you prefer, you can file for what we call calendar quarters, which means that the first time you do have to start on the 6th of April because that's the beginning of the tax year, but you'll go to the end of the month. So that would be the 6th of April to the 30th of June. then the 1st of July to the end of September, and so on and so forth. Some people just find it easier to think in calendar months. Some people find it easier to think in tax months. The choice is yours. As I say, if you've got more than one sole trade, then you do need to be filing quarterly updates for each of your individual trades. HMRC have said they will take a fairly relaxed approach to how accurate the quarterly updates should be. You need to do your best to get them accurate. I wouldn't be lackadaisical about getting them accurate. Don't be too careless, because HMRC don't like that. But if you do make a mistake, then there is a process by which you can put that right. If you find an error, if you filed a quarterly update, so say you've filed a quarterly update for April, May and June, and then you realise you've left some costs out. It's not a problem, you just add them in, and then they will get scooped up and filed to HMRC in your next quarterly update. As from 2025 to 2026, the quarters are being filed on what we call a cumulative basis. So if you are filing up to the 5th of October, you'll be filing everything from the start of the tax year to the 5th of October, even supposing you've already filed for the first quarter, because you're filing sort of year to date as at the end of that quarter. So what that means is that you don't have to resend a quarter with an error in it. So if you discover an error in quarter one after you filed it, you put that right, and then the up-to-date figures, the accurate up-to-date figures will go to HMRC at the end of quarter two. You haven't got to make another filing for quarter one in order to correct the error that you made. And then you've got a page for what we call adjustments and allowances. And I would say if you're in any doubt about any of these, then please do speak to your accountant. Adjustments and allowances are things like, suppose you've taken some goods out of the business for your own use. You do have to treat those as if they were sales, so you have to add an adjustment for that. Suppose also that you bought a new piece of equipment to use in your business. If you're a web designer, you might have bought yourself a new computer. You might well be able to get capital allowances on that, which are HMRC's way of helping you save tax if you buy a new piece of equipment. You would also put those on the adjustments and allowances page. You can fill this in at any time of the year, but it will only go to HMRC if it's filled in completely, which includes what we call the non-financial information here. In other words, have your business details changed in the last year? And are you exempt from paying Class 4 national insurance, which might be if you were under 16 or you are above the state pension age? You have to fill that in if and when you want to file the adjustments and allowances page to HMRC through the year. So now let me show you what it actually looks like to file a quarterly update to HMRC using FreeAgent as an example. So we've got a little video, which you can see now playing on screen. Yep, great, the video is playing. So what you can see there is we've got the screen in FreeAgent that shows all the different quarterly updates, shows the numbers. So I've clicked send update and you can see that it's asking me to choose which quarter I want to file. So I've said I want to file up to the second quarter. It's checking what dates it is. It's getting me to just make sure that I'm happy to make that filing submission. And once I'm confident I'm ready, then I can file that to HMRC. What you'll see as well is that I haven't got to put in my details every time. Once the connection is set up in FreeAgent, then all I have to do is to tell it to submit the update. It is only every 18 months that I'm going to have to renew that connection to HMRC. So the filing begins, and you can see that it's gradually updating as it sends the data to HMRC. It gives me an indication of how far along the update process is. So it's a nice quick update process. Just push a few buttons and off it goes. I know it quite possibly feels like a hassle to have to do that 4 times a year instead of just doing one tax return, but it is nice and quick and easy. That video is only just over a minute long. Now let's have a think about the final declaration. So the final declaration you make after the end of the tax year. And the idea of the final declaration is that you tell HMRC all the other income, all of your other taxable income that it doesn't yet know about. The reason I haven't put a screenshot of the final declaration in there is because we don't yet know for certain exactly what it's going to look like. But it's going to include other income that you might recognise if you are already doing self-assessment tax returns. It's going to include things like bank interest, dividend income. So it's going to include basically, as I say, everything that HMRC doesn't yet know about. An old style tax return, you're used to reporting everything in one go, all of your taxable income in one go, your interest, your dividends, sole trade income, any employment income, property income, everything in one go. Under Making Tax Digital, HMRC already know about your income from your sole trade or trades and your property or properties. So you only need to include in your final declaration a statement that HMRC have got all of the information that they need for the year about what you're reporting under MTD. You check to make sure, because HMRC already know about your employment income. If you've already got a job, your employer is going to have been telling HMRC about your employment income as you go along. That will then tie into your Making Tax Digital record, and as you make your final declaration, you'll be asked to say, yes, this is how much I earned from this employer. But you don't have to re-report everything that you put through on your quarterly updates because HMRC already know about it. So what should you do now? Here we are in October 2025. What can you do now to help yourself get ready for Making Tax Digital and start to get comfortable? What I would suggest is that if you are not already using functional compatible software, if you are not already using MTD-compliant software to keep your business books on, now might be a good time to make that start before you have to, so that by the time you have to start keeping your records digitally, you're quite comfortable with doing it. Get into practice now. And what I would also say is the temptation is to leave it till after Christmas. I know that well, but I wouldn't if you can help it. Think about whether you might wish or be able to sign up for what HMRC are calling their testing phase. So they're looking to test Making Tax Digital for income tax filing with sole traders and landlords. If you like the sound of that, have a look at HMRC's website and at FreeAgent to see if you would be eligible to join that testing phase. We're also going to send a follow-up email to this webinar with some more information about what you can start to do next to help yourself get ready for Making Tax Digital for income tax. That brings us to the end of this webinar. Thank you very much to you all for coming and listening. Thank you so much to Ben for answering all of your questions. That was fantastic. Thank you very much. Apologies to those whose questions haven't been answered. We'll take all the questions away and review them, and we will make use of them when we're looking at building material going forward, because if you've got that question, then quite probably somebody else does too. Thank you very much again for your time. Very much appreciated you coming along today. Thank you and have a good afternoon.